Hello, today we'd like to talk to you about fraud in a financial statement. I'm Josh Amadio, and I'm going to be talking about the fraud risk triangle, the two types of fraud, and what kind of fraud Earthware would most likely be vulnerable to.
I'm Leticia Mejia, and I'm going to be talking about the auditor's responsibility when they suspect fraud, how to communicate a fraud that they found, and what needs to be documented.
I'm now going to be talking about the fraud risk triangle. The definition of fraud is the wrongful or criminal deception intended to result in financial or personal gain. The fraud risk triangle is comprised of pressure, opportunity, and rationalization. Pressure exists when management is under strain to meet sales quota. Opportunity exists when an individual believes an internal control can be overridden. And rationalization exists when an individual possesses the set of ethical values that allows them to rationalize committing a fraudulent act. Alright, now I'm going to talk to you about the different types of fraud. There are two types of fraud that relate to material misstatement in the financial statements. They are fraudulent financial reporting and misappropriation of assets. You can look for yourself on this chart right here to see the many examples of these two types of fraud. Fraudulent financial reporting includes manipulation of accounting records, misrepresentation of financial statements, and intentional misapplication of financial principles. Misappropriation of assets, on the other hand, involves the theft of a company's assets and is most often perpetrated by employees in immaterial amounts. Generally accepted auditing standards requires that the financial statements are whole and free from material misstatement, whether resulting from error or fraud. Error occurs when misstatement is unintentional, and fraud occurs when misstatement is intentional. Intent is often difficult to determine, particularly in matters involving accounting estimates and the application of accounting principles. Now we are going to examine the type of fraud Earthware clothiers would be more vulnerable to. Misappropriation of assets would be a less likely form of fraud for Earthware due to the fact that they are an online company and do not have that much physical cash on hand and lack cashiers. Fraudulent financial reporting is a more likely form of fraud since Earthware's management could collude financial statements or advance revenue recognition to meet the sales quota for the year. Doing this would raise their revenue and keep potential investors happy. Now Leticia is going to be talking about the auditor's responsibilities in regards to suspicion, communication, and documentation of fraud.
If an auditor suspects fraud, they may have to change the nature, timing, and extent of audit procedures. The nature of an audit procedure may have to be changed to become more reliable and relevant. This relies on changing the type of procedure, for example, a physical procedure versus a computer-assisted procedure, or changing the procedure to address a specific risk. So for example, if the auditor knows that management is under pressure to meet an earnings expectation, they may look at sales invoices. An example of a change in timing is when an auditor could conclude that performing substantive tests at year-end may better address the risk of material misstatement. An example of change in extent is when an auditor decides that changing the scope may be beneficial. For example, especially in computer transactions, now with technology, you can take an entire group of data instead of taking just a sample. With regards to the communication of fraud, an auditor needs to communicate to management, employees, and other parties once they know a fraud has been committed. As you can see, this report is to be brought to the appropriate level of management, typically an authority 2 steps higher than those committing the fraudulent acts. If an auditor suspects fraud involving upper management, the auditor should reveal that to the audit committee and discuss with them the nature, timing, and extent of their audit procedures. They may suggest that the audit committee acquire legal counsel. Additionally, the auditor must decide whether to notify any regulatory or enforcement agency outside of the entity. The auditor's legal responsibility may override their professional duty to client confidentiality in severe circumstances. In the audit documentation, the auditor needs to include their understanding of the entity, their response to the addressed risks of material misstatement, their communications about fraud to management and governance, and documentation supporting the audit's conclusion. In the overall response disclosure, the auditor must include the results from the audit procedure and detail any attempts by management to override or cheat controls, internal controls. Finally, if the auditor concludes that there is risk of material misstatement related to revenue recognition, they must explain their reasoning to support that conclusion.
In this presentation, you learned about the fraud risk triangle. It is composed of pressure, opportunity, and rationalization. We also learned about the two types of fraud. Fraudulent financial reporting, and misappropriation of assets. We also learned that earthware is more vulnerable to fraudulent financial reporting because it lacks as many physical assets as an online retailer.
Thank you. In part 2, you learned that when an auditor has suspicion a fraud has occurred, they need to reevaluate the nature, timing, and extent of their audit procedures. Which is under suspicion. You also learn that when an auditor communicates a fraud, they need to do so at a level 2 steps higher than the level of management the fraud occurred in. If a fraud is committed by the highest level of management, the auditor must communicate it to the audit committee, or in severe circumstances, an outside entity. So, communication. Finally, in part 2, you learn the components an auditor must include in their audit documentation. This includes their understanding of the entity, response to addressed risks of material misstatements, communications about fraud and management, and documentation supporting their professional audit opinion. Thank you for watching our presentation.
Thank you.